Thank you very much, Johannes. I'm super excited to invite our panelists on the stage. Please come join me.
Thank
we
you very
have
much.
Carolin Wais, Director, Investor, and member of the EMEA IC at Plug and Play. We have Dr. Andre Retterath, partner at Earlybird VC in Munich, where he focuses on enterprise software. Then we have Benedikt, CEO and co-founder of Flip, Stuttgart-based startup and one of the leading providers of employee apps in Europe. And last but not least, we have Pohl, CTO at Celus, a Munich-based startup which has created an engineering platform to automate the development of electronics with the help of AI. Welcome, everyone. Thank you so much for joining. To begin with, let me just quickly set up the scene for the panel. So basically, over the past couple of years, we've witnessed something quite exuberant happening in the venture market. I think the last half of 2020 and then the whole of 2021 was a year of record for startup funding. So in Europe alone, I think in terms of investments, startups have gained around 100 billion in investments. And then when it comes to unicorns, last year alone, there were 85 new startups reaching billionaire status in Europe. So that's quite a lot when you compare it specifically with 2020, when only 11 startups were reaching the status of unicorn. So there was a lot happening in the past couple of years, and right now we're quite in a different position. I think overall interest rates are rising, inflation is going up, we're facing some geopolitical crisis as well, so we're slowly seeing that the economy is a bit slowing down. Not sure if we're going into a recession or if there's something more happening out there in the economy, but we're preparing for it. So on this panel, we want to discuss exactly how does this change affect the tech scene in Europe and in Germany more specifically, and to understand both from founders and investors how we should prepare for what's coming up next. So maybe if we start with looking back at the past couple of years, we know that a lot of money was out there. Investors were trying to chase the biggest deals. There was this fear of missing out among investors. The valuation were kind of going up. So from an investor perspective, looking at Caro and Andre, how would you describe maybe the market dynamics of last year and maybe also a bit of beginning of this year? What did you witness out there in the market?
Yeah, so as you said, it was a groundbreaking year for venture capital. As Plug and Play alone, we had 13 new unicorns in our portfolio. Just to put it in perspective, we've been investing since 2006. We had 15 unicorns before, and in 1 year we added nearly that number. So it's been an incredible year for us, an incredible year for our portfolio companies as well. You definitely saw a very favorable market for founders. Term sheets coming in within hours, rounds closing sometimes within 1 day. So it was really an incredible market dynamic. I think quite healthy for the VC world because a lot of investors had to reassess their value add, their strategies, and what they really bring to the table. So definitely good in that terms. And I think for Europe, we've seen a lot of US investors entering the market more heavily, which of course put some pressure and also led to a lot of funds going more early stage and investing really, really early. But yeah, I mean, overall an incredible year. I think a lot of big rounds being raised, and now let's see how that's going to continue. But definitely a strong year for venture capital.
If I may just jump in here, panels are always fun if they're a bit contrarian, right? If I would need to summarize 2021, I'd say overall unhealthy. So that would be the one-word phrase for last year. Because I think the whole ecosystem went to a phase which got very unhealthy for all of the shareholders. Essentially, investors rushing into it, and venture capital is really a long-term partnership. So we not only invest for like 1 or 2 years and then we flip it around. We get in and then we typically partner like 5, 6, 7, 8 years with a company. So if you only have time to date once and then need to make the decision to get into a marriage, I think it's super unhealthy. And that was, second of all, and that's exactly in line with what you said, represented in the term sheets, where suddenly you don't have founder vesting, where suddenly you have very specific clauses that were, to be honest, very harmful for all of the shareholders. So I'd say it was good in terms of competition because the founders could select. And I think that was the overall dynamic where in the past you had on the supply side, you had very constant number of startups. And on the demand side, specifically here in Europe, it was just underrepresented. And then suddenly, with very cheap money in the market, the demand side grew. So more investors needed to hunt for the constant number of startups, which led to one, an increase in the prices in the startups, but two, and that's the unhealthy part, also very unsustainable terms. And I think now with also the macro system connected to that, supply chains and demand, and also interest rates getting down, we get to a situation where it's getting more healthy again and where it's getting into a balance. So I think it was a good accelerator to what you said for the ecosystem because we see it's needed to do their job, but now it's getting more balanced.
Absolutely. It was definitely a good year to raise money if you were a startup founder because you had a lot of room to play around with the terms and kind of had a lot of power, so to say, in this whole founder VC investor game. So now looking at our startup founders, maybe Bene, if I may start with you. Flip recently raised a huge 30 million round Series A earlier this year when I think the market conditions were still quite positive. The party was still on, the music was on, investors were still chasing the biggest startups out there. So could you share with us something from your experience? How easy, how quick was it for you to close the round? What kind of a feeling did you get when interacting with investors over the past few months?
Yeah, coming from the founder side, as bad as the conditions were for investors, as good as it was for founders. So, like very different times, I would say. But I think we kind of raised on the tip of the iceberg, to be honest. Closing January and end of the year, kind of. We were quite lucky, to be honest. But like coming now, the times are definitely changing, but it's still, I think, it still pushes the best companies. The money is still out there. The funds raised, the money is there. Just the valuation dropped a bit. But for the best companies, the best 1%, the best 5%, there's still money going to be available. They're still highly competitive. And I think this is going to continue, but all the middle ground is going to be is vanished. And I think also the big ideas that take ages. And a lot of money to evolve and to become like. I think, I'm not sure what you say, but I wouldn't think the gorillas would be funded this year, like in funding, and this kind of crazy stuff definitely is not going to happen anymore, not at least in the next 6 months. But you always have to think the funds, the VC funds, they raised the capital is there, and it has to be deployed, and it will be. And the funds, I think, in my perspective, for the best companies, are even more eager to get the best deals. And it maybe even can push the valuations for the best companies, but the whole middle ground is going to be managed.
Absolutely. So I believe you're quite happy that the round is over, is closed, so you don't have to worry too much of what's coming up next. There's definitely a bit of a flight to quality, so investors are definitely paying a bit more attention now to the deals that they're doing. And now turning to Alexander, I know Celus has just recently raised a lot of money, 25 million Series A. Congratulations. The round was led by Earlybird, and we had participation from Plug and Play, so that was all great. Could you tell us a bit about the fundraising experience? How were your negotiations going on with the investors?
Yeah, sure. So, I mean, first of all, I agree with all that has been said before. Of course, founders sometimes have a different perspective than investors on certain things. I think we were even a bit later than Flip in that sense, and kind of, I would say we were close to the tip, even closer maybe. It was still very good for us, and I think the fundraising itself was rather fast, I would say, compared to also what we experienced maybe in 2020 so before that hike, so to speak, that we had in 2021. But I do see that now tides are turning. We already had that while we were raising that. When we did internal assessments, people were getting more and more skeptical about the future, and I think, I mean, to quote one thing, timing is everything in that sense. So in that kind of breakdown, there's also to a certain extent a breakthrough, at least for those who were lucky to kind of get in before. I think right now we need to expect for the next couple of months, as it has been mentioned before, that it will be more tough. But there will be a correction in the market. But I think if you are in a spot, for instance, where you raise a lot of money already, that is also a certain advantage in that extent.
Absolutely. That gives you a bit of peace of mind.
If I may just add to that, I think also what you've seen in the last, I don't know, let's say 18, 24 months was that rounds happened significantly faster after another. So sometimes you saw round preemptions only 4 or 5 months after the last round was just closed. So I think that was also unhealthy because typically you only raise if you do an up round. So you raise more capital, the valuation goes up, but that's nice in the short term, but in the mid and long term, it really sets the bar because you need to grow into this valuation, and then at some point you need to justify. And this point starts now. So in the last couple of weeks, months, you saw exactly this, where from the public markets, where most of the money was drawn out, there is a trickle-down effect coming from the growth funds now also to the earlier stages. I think that's number one, what you see. And number two, that's a contrarian effect, is exactly what Benedikt said, is the money is raised specifically for the early stage funds, but the early stage funds, they don't know how long they need to live from this money. So it might be that you can continue to invest for 2 or 3 years, but it might also be like in 2000 to 2007, you sometimes need to live 4 or 5 years from this fund. So the biggest questions for most of the VC firms, and specifically also the question that we ask ourselves, is about investment pace. Will it naturally slow down, or do we need to proactively change our processes to slow it down?
Absolutely.
I don't know how you think about it.
No, I mean, I guess I couldn't agree more. Definitely agree. I mean, money has to be deployed, and you have certain times where you need to deploy it. So I definitely think there will still be a lot of money in the market. But the big question is, how much money do you also have to keep in a reserve if the company is not being able to raise in 12, 18 months? You have to do an insider round. So it's really a question I think that VC funds now pose themselves, but I guess also our panel today shows that the best companies will still get funding, but it might be that these really crazy rounds, like you mentioned, Gorillas, Flink, they won't really sustain in this environment, and we're already seeing that. So I guess really we're going back to the basics where we look at healthy business models, healthy ways to scale. We look at, is this actually a sticky product, and will it kind of remain, because everything that's not a must-have but a nice-to-have will now be cut out of budgets. So I guess we're going back to the basics of investing and really evaluate, is this a good company, which I think is healthy, and kind of a correction of the market last year.
I think also, I totally agree. I think that the investors' idea is that maybe called moonshots from the investor side, but maybe called crazy from the other side. They probably won't get funded in the next couple of times, and the numbers you're looking at change differently. Growth is not as important as burn multiples and this kind of things. And this is like really interesting because you now have to change the strategy. And I'm very happy that we are a Swabian company, to be honest, because as a Swabian you kind of inherit the being frugal and hate spending money, and I think this benefits us now, to be honest. Yeah.
Those are the companies we are looking for. Just to add to one point, also in the past, say, I don't know, 5, 6, 7 years that I've seen the VC world, you typically raised for a runway of about 18 months, plus minus. So that was the rule of thumb, which was in place for a very long time. This has changed last year. So last year, you could raise for, 12 months and really burn money like there is no tomorrow, and then hope for a new round to come in, to be preempted. And founders were like, I will go out, have a coffee chat, I will wait to be preempted. And this has changed, and actually our strategy is to either double down, like if we have conviction, rather increase the round size and go for 24, 30 months right now, because we don't know how the market will evolve, versus going even less and giving them less room to breathe. So that's currently what we see as a trend, that companies rather raise for 24, 30 months than what was natural in the past of 18 months.
And if I look at Caro, what about plug and play and how are we responding? Because we're one of the most active early stage investors. Do you think there's an immediate change? How are we reacting to these market conditions? Will our number of investments or quality of investments change, do you think?
So I guess for us, the first 7 months of the year have already been very, very exciting. So we already did a lot of investments in especially also the EMEA region, and we don't see this slowing down. As said, we will look more eagerly again at the metrics. We will look how do our corporate partners also, because we do a lot of B2B, respond, and really will look for these teams that are maybe a bit Swabian, like you say, that kind of take care of their runway, that take care of their metrics and stay healthy. For us, it was also a very good opportunity to launch our new startup camp EMEA, so an initiative we've been running in the US for some time, which basically gives founders money from day zero, so really funding them from the first moment. For us, it was a great time now to enter the market with that, and now we can really cover investment stages from pre-seed all the way up to Series B. Guess we will be doing less of those and kind of enjoy the lower valuations we're seeing right now, and with that also get a bigger shareholding. But yeah, we continue investing, and if there's great founders in the audience, come talk to us.
Perfect. And now looking at our startup founders and the businesses that you're building. So you've managed to secure some funding. You're happy about that. You have 18, 20 months ahead of you. How are you protecting your businesses during this downturn? What are you doing now to kind of help preserve the cash for as long as possible, because we don't know exactly when the next round might come and at what valuation. So what are your internal strategies right now? What are you saying to your employees? How are you managing costs? Has something changed?
I mean, from our perspective, as always, actually, you first of all need to be smart, and I mean, you need to pick your battles. I guess we already did that before, because usually let's say, looking ahead always helps, and I think nobody could actually see those, let's say, those big changes that now have happened. Yeah. But still, I think planning and looking ahead and really focusing on your core business and onto, let's say, on the KPIs and the things you need to deliver that are crucial to your own success. Yeah. I think that is more important than ever. And then, of course, I would say there's one thing we could, of course, go through the list of, let's say, normal suggestions. Runway is very crucial. Let's increase that. Don't spend unnecessary money. And there are a bunch of more of those. But I think what is the most important now is to really bring in expertise and listen. Listening is one of the most important traits that you need to have as a founder, in my opinion. Because you usually should surround yourselves with people that are smarter than you and that can help you make good judgments, and then it's your own, let's say, it's your own responsibility to make a call as a founder. But I think that is really crucial, like bring in people who can actually help you to get the best strategy and the best decisions out there. That is more important than ever, I would say.
Absolutely.
Our strategy is to stay Swabian, as mentioned, as from the beginning. But this is, we're building the desks we are sitting on. We are self-built and kind of thing. So we're quite taking this down. We're taking this very seriously. But I think there are two things in it. One is extending runway, and this is kind of obvious. But it's also at the same time it's a market opportunity, because it can change things that wouldn't be changeable before. You know, it's like. When you look at all sorts of markets, in the crisis mode, like companies and market position changed. When you look at Stepstone, it just became huge in the crisis. And like those kind of things. And I think you as a startup, when you just raised, you're in a perfect spot also to double down on things and really change how the market is structured, like your market position, and like really win the customers others can't right now, and become like a dominant player in each market. And so at the same time, we try to extend runway and double down on the things that are working really well. And yeah, I think this is our...
Yeah, if I may add one additional thing, and that might have been something of the unhealthy things that have happened maybe, let's say, in the last year. There is actually a difference between growing and scaling. Sometimes people confuse that, but that's not the same thing. I think that is also an important thing. If you just pour money into something when you actually don't know if your core hypothesis, for instance, are actually sound or not, you can always, let's say, buy 50 cents with $1. That's not that hard, but now also making the tough decisions of really looking into your business models and into also maybe your operations a little bit. Like, does it really make sense or not, is more crucial than ever to make that assessment and really focus on your core KPIs.
If we were to pull up a crystal ball and look into the future, how long-lived do you think this economic downturn will be? Will it be around for only 6 months? For 1 year? Are we going to recover? What do you think will happen? Should we brace ourselves for a dark, dark winter? Or is this something that we can easily manage and get out of in the next 6 months, let's say?
I think within Earlybird, we have very clear perspective on that. Earlybird was founded in 1997, and we've been through some downturns, obviously not me personally, but our partners. And for us, it's very clear that in the worst downturns, you can build the biggest businesses. So I think it's the best time to really start a company if you're very serious. And from my perspective, it's good because it will weed out the tourists, the founders that in the last couple of years started a business because it was just nice and everyone started a business. And I think it will leave the market with those who are very serious, who have clear conviction about the market. And I think those people, they will always get funding because they're up to something big. So to wrap it up, I think the downturn will take longer than we think, but I think it's for founders and VCs an amazing time to really build huge businesses. So think big, stay Swabian.
Very nice. Any words, Caro? Yeah?
No, I mean, I know you like to disagree on stage, but I couldn't agree more. I mean, the crisis is the best time to start a company, to be innovative. So actually, start your businesses now. Excited to see them. And I guess it's a perfect wrap-up for our panel.
Absolutely. So don't be afraid to get out there, to play hard and work hard for your business, because the best investors will still be around to kind of fund the best businesses out there. Thank you very much, Caro, Andre, Benedikt, Alexander. It was a great pleasure to have you here. If you want to get in touch with them, please grab them after the panel discussion. They will be around for the next few hours as well. Thank you.
Thank you.
Thank you.